playing a little bit more Speculator because I'm already in the flow of playing. So we have a bit of cash right now, and interest rates are starting to rise. So I regret kind of buying CISO, especially because we have lost a bit of money on that. EXE we've lost a bit of money at, but the dividend yield is just spectacular. I feel like to a certain extent they might cut it, which would be a bit crappy to a certain extent. But it looks like they're having a comeback. Second quarter, they already have 74 cents, so they're going to probably beat. So I feel like that they're making a bit of a comeback. So I feel like that was a good investment for us. Should put margin on it, but don't want to put margin on it because if you put margin on it, then you can get margin calls and stuff. But they're good for like buy and sells, like especially if you're going to be doing like high risk investing, like whenever you're buying and selling for growth, margin could make sense. But like Warren Buffett said, I think he said in one of his quotes that if you're going to use margin, you're either too smart to use it or you're too stupid to use it. So basically, you can say that like for a certain extent that if you're too good at it, if you're really, really good at investing, it makes no sense to go for margin. If you're really, really stupid, it makes no sense to go for it. So it's a funny little quote I got a while ago. And it makes no sense why CISO has fallen. They just had an amazing quarter. So it honestly it would make probably a lot of sense to buy more of that company because their quarterly results were actually pretty fantastic at like, but I guess the industry isn't looking as hot. Let's just double check. Biotech. It's bad right now, but it's gonna still get better over the long term. CISO. And it's a really good deal right now, so I'm actually gonna I don't know whether or not it'll be a good idea to eat up some margin on that sucker, because it might be a good short-term play on CISO. So we're going to go a bit high risk. We're going to buy margin for this sucker. Yeah, so it's going to be a bit of a mess, but I'm just going to explain to why margin kind of sucks. We can lose almost all of our money because we have $214,000 in margin debt. Interest rates are reasonable, though, so that kind of helps. Our annual cash flow, we're only making 1,000 because we're putting 18K towards interest. So this could either work really, really well for us, or it could be the end of the series. So I am praying that this whole CISO deal does not drop. If the share price keeps dropping, I'm going to basically be called on for my debt, and I'm going to be in a bit of trouble. So just show you guys how the power of margin can either you're basically using other people's money towards your own gains. Margin call. Okay, I'm gonna say goodbye to this financial shares fund. Let's just hope that this CISO deal goes well. I feel like it's not really going so well for me right now because I'm got a margin. Worst case scenario, this is the end of the series. I will play a little bit more conservative because honestly, what I would do is in order to get out of mill, I honestly just did CISO. I honestly just did margin. I just traded some stocks. So I don't know whether or not this is going to work out or not. We're either going to get burned really, really hard or we're going to do really, really well. Let's just hope that CISO does well. If they don't do well, we're basically in trouble, and it's basically the end of the series. I could cheat the system, and honestly, because I saved before I did the margin. I usually do that. In order to get good at this game, like you got to put a lot of practice in, so you can do hypotheticals where you can say, oh hey, where you can save the game and you can reload the save, and then basically you get back to the whole point. Yeah, we're basically in trouble unless CISO has an amazing, spectacular quarter and everyone jumps in. Because interest rates right now are 10. So yeah, we're in a bit of trouble. Yeah, our entire portfolio is down. We've lost almost all our money. We're basically back to square one. Just hoping that the whole CISO deal works out. If it doesn't, we're in trouble. It's getting worse and worse every day for us, so I feel like to a certain extent that whole margin deal was not a good idea, but I feel like to a certain extent it could actually work out for us. I'm hoping it works out. So the interest rates are going back down. That's good news for us. Makes it a lot cheaper for us to borrow the money, therefore probably less margin calls. And CISO is coming back, so we're probably going to make a profit off this trade. We have already made a big profit off it, so that's good news. I'm going to be a little bit cocky and wait for it to go up into like 20s. Basically, we made like $200,000. So we're actually going to make a profit off this trade if it keeps going up. That is the benefit of margin, basically. We basically just turned... yeah, so... But we got in a bit of trouble. We had to sell the financial shares fund, but we basically... we turned $300,000 into $500,000. That's just crazy, so... our portfolio is just doing spectacular because we took out a lot of excess risk in order to basically taking out all that excess risk was probably not worth it, but it's also worth it to a certain extent because we took home a big profit at the end of the day. We haven't closed the trade yet because I feel like CISO probably has a bit. I feel like it might have a bit more steam in it because it just outperformed. And so if they're going to give it 16 cents, I feel like it might be a sell because it performed 90 cents per share over the year. And their projection 16 times 4 is obviously not 90. So people are giving it a buy. But then again, I also feel like it's about time we take our profit and run. Because I do not want to get caught with my pants down. And our bond portfolio, we don't have any. I wish we would have picked up some bonds. And I don't think I have all the sweep to cash. Let me just double check. Yep, sweep to margin. And now we have just exploded our wealth. Now we have an extra $300,000 to invest right now. And bonds are okay right now, but they're not the greatest. I would prefer if it was around 8, or you're making around 7 to 8% of the long, but you're not. So technically right now, it probably makes more sense to go back into growth. And I know I got burned before then on growth, but I feel like it's a good time to do this. If you really want to cheat the game, what you can do is, honestly, like I said before, you can honestly just save the game. We made a big profit, we're going to save the game, and then we reload our save, we're going to have $500,000. So, cheating the game, basically. I could theoretically bring back the entire... basically, if I mess up and I lose everything. But that also makes it a lot less fun, because it's basically, you lost all the money. It's a great way of teaching yourself, hey, if I were to do this, then does this work better or not? I've been talking a lot this episode. I apologize. Just because I'm trying to like explain like how you make a lot of money in this game is actually through growth. It kind of makes long-term investing not seem like as much fun because I was flat for years and now my portfolio has just skyrocketed in value. So I'm gonna buy about maybe 10,000 shares of VEP. It depends if their conditions are good. And we're going to start diversifying too, which will be nice to do. 18 times earnings, 10% ROE. Return on equity, so that's basically your net income divided by your shareholders' equity. So it's actually a pretty important ratio. That's a good dividend yield. Not bad debt to equity. I feel like it's probably worth the buy, and I feel like they might have a comeback. $3 predicted at 78. They might actually underperform this quarter. Who knows? But I feel like it's a decent time to buy a little bit of VEP. Okay, so we have about $200-something thousand. I'm only gonna buy like only buy like 3,000 shares. And now we have about 158,000. I kind of broke my rule, so I kind of said like, hey, I was gonna go for a lot more diversification, and which I will. But I feel like high growth is where it's at too. So diversification will be nice, but I'm trying to unlock options and stuff. That way I can hedge my bets and stuff. Limit my risk. Okay, what's good in the biotech industry? Typically, the biotech industry is where all the fun is, basically. It's where you can either lose all your money or you can make most of your money. Because it's got a lot of growth. But when when things are when the only good company you can see is a CC, things are pretty bad. The only one I see is CISO right now that's good, or this one, but that one's got a bad credit rating. So it makes no sense to go into that. So I'm probably just going to keep cash unless the environment is they're easing. So honestly, if they're easing, I'm hoping that this actually works out in the end. If they do lower interest rate, if they upper interest rates, I'm in a bit of trouble. But we're going to buy 152 of the long bond because it pays out a decent rate. Yeah, so we're going to buy 152 of the long bond. We borrowed a little bit, I think. So that's, yeah, we only borrowed like 8K. So our cash flow is going to be able to pay for that. But I'm playing a bit cocky. I'm going to bet that they lower the rate a little bit more and I can make a slight capital gain. And we are doing pretty well. 24K. So I'm hoping that they lower the interest rate. They could just decide, oh, hey, we're going to raise, and then I'm in trouble. But yeah, right now we probably made a slight profit of our bonds. Not bad. The question is, do I really play cocky? And I bet that they lower it to like 4, which could burn me or could not burn me. Worst case scenario, I just keep the bonds for cash flow. And honestly, that wouldn't be a bad idea. Because we already have we have a lot of stocks right now, and we're holding them. So it would make a lot of sense just to keep all these companies for cash flow and then reinvest the cash flow into more riskier bets or more safe bets. I don't know. It depends how I feel like. But yeah, we're doing pretty well right now. Our whole investment strategy stuff. Hopefully they lower the rate a little bit more. That way we make a slit. The problem with bonds is you're acting like as a way of chunk change. You're offering leverage towards companies, and as I showed in this episode and last episode, leverage could basically help increase your basically help increase the amount of profit you can make. Like our profit is just we made tons of money off that deal. So when you're offering a bond, you're offering debt. So that way people can actually make a lot of money off of it, or they can lose almost all their money. Bonds are a lot safer though, because like you're offering credit to someone, you're loaning them money instead of taking ownership in a business. So when you're taking ownership in a business, you're gonna expect that there would be ups and downs of the business. Like Warren Buffett said today, I was watching a video. It's like Warren Buffett saying that you're basically buying a farm, and the farm is gonna have good months and it's gonna have bad months. And so when it comes to bonds, you're basically betting that, hey, I'm going to loan this person some money, they're going to pay me back plus interest. And you basically get the assets and stuff. Depends what kind of bond it is. That's a little bit complicated to explain, but there's debentures and there's regular bonds, which regular bonds actually give you, they give you property and stuff. But the debentures are only backed by the creditworthiness. Anyways, I feel like we have kind of done really well during this episode when it came to margin and last one. So I'm just going to keep diversifying, and I'm going to keep doing well, dollar cost averaging, and of course growing our money into a bigger stake. And taking lots of risk. And basically making me have a slight heart attack because I'm not super duper good at growth investing. I'm only good at value. Anyways, I hope you guys have a good one, and I'll talk to you guys later.